Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be talking about Ford, ticker symbol F. In today's agenda, I'm going to give a price target for the remainder of 2021. Q2 results are coming up in about 2 weeks. I'm going to go through 3 things you need to be looking for in their results for Q2. We're going to look at the stock price history, their price performance versus their peers, the fundamentals and financials. We're going to go over some dividend information, when to expect the dividend to be reinstated, and then finally, my thoughts. If you're new to my channel, I do videos on personal finance, investing, and stock analysis, such as this one. If you like this type of video, please consider subscribing, like the video, and leave a comment down below. Let me know what you think. Now, back to your content. All right, so for my price target for Ford for the remainder of 2021, so the next 5 months, is roughly $14 to $15. They're already trading in that value right now. Throughout the rest of this analysis, I'll talk about some of the reasons why I believe they'll still trade in that range, but that is my price target, $14 to $15 for the remainder 4.5 months of the rest of the year. All right, so Q2 what are we looking for in their earnings? So the earnings per share estimate is around 5 cents. Revenue estimate is around 22.4 billion. We're going to want to look to see, obviously, get beat on those. They have had earnings per share down revisions of 6 and only 1 up revision in the last 90 days. Now, there's really 3 things I'm going to be looking for on the earnings call, and they're not revenue or earnings per share related. It has to do with their EV Ford pickup truck, the Ford Lightning. Are they on track to start delivering vehicles next year sometime, probably end of year, but we need to see some traction. It's their number 1 selling vehicle, the F-150, and they got to get in, at least have some EV progress to make sure they stave off or, keep off some of the competitors, Tesla, NIO, some of these people that are making trucks. I'm not sure if NIO's making trucks, but point is, they need to make sure that they stay in the EV game so they keep competitors away on the electrical vehicle front. That's super important. If they lose some ground on the truck sales, that's a pretty big deal. Now, the second thing is Bronco deliveries. I think this is one of the best vehicles they come out with a long time. They really need to deliver and make sure that they're delivering quality products. When you have a new product roll off the line, you want to make sure that they're meeting quality control. They're not getting sent back. You're not going to have a bunch of recalls. This is something you're just going to want to pay attention to, monitor, make sure they're meeting their commitments. The faster they get these things off the line in quality, the faster they can sell more and get more and more produced. So this is just going to be something I think you're going to really want to pay attention to, at least me specifically. So the third thing you're going to want to pay attention to, are they going to reinstate the dividend and when? So I'm going to talk a little bit more about that later on in this video. So if you want to check out the timestamps down below, you can do that here. Hey, if you haven't hit the like button, please hit it right now. Thanks so much. Again, please hit that like button. All right, so jumping into the 5-year chart, if you basically look at Ford, if you were invested in the, before 2020, you're down about 36% from 3 years prior to the pandemic. If you got in it during the low in the $4 range, you're up about 250%. You're pretty happy right now. If we bring that out a little bit farther, back in 2014, they're trading at $17 a share, and they dropped all the way down into around $8 before the COVID, and you're down 50%. If you held, you're down 75% on your investment through COVID, and you're probably pretty mad at Ford. Another time you could have been, sitting pretty was prior to the last recession in 2009, 2008, and you were up, 7x, 8x, just, if you timed it perfectly. If you owned it before the recession, you still were seeing pretty sharp declines, big rises, sharp declines, and rises, and then this gradual decline over the last 7 years, up and from 2013 to 2020. So this big rise here in Ford kind of makes me nervous, and we'll talk about that a little bit more. I think if you're, short-term investor and you got in during the pandemic like myself, I'm looking at exiting this position. Just because I've made good money on it, it's time to exit. This isn't a long-term investment for me. I'm not a dividend investor. We'll talk a little bit more about that later, but this is just what the price actions look like, and that's something, just the price action of the history is something I'm not uncomfortable with in a long-term investment. All right, so next up, I want to talk about price performance versus some of its peers. Peers on here is we have General Motors in blue, Fiat Chrysler in orange, Toyota Motors in purple, and Tesla is in green. So in the 2-year mark, Tesla's up by 1,240% versus Ford at 45%, which is still good over a 2-year period, in my opinion. At the 1-year mark, Ford is actually up there with Tesla and General Motors in that $112 to $128 range, or not $120, 120% range. And then Fiat and Toyota Motors is around in the 40s. If we bring that even down to a shorter time period, in the last 9 months, Ford is leading the pack at 90% gain, GM second at 80, Tesla at 50, and Toyota in that 36. And the 6-month range, Ford is still leading at 49%. So you can tell they're still doing fairly well. In the last year, they've performed exceptionally well. So they're up at 49%, 23 at GM, Toyota 17%, and Tesla's actually lost quite a bit at around 19% there. And the 3-month, these numbers start to get smaller and smaller. So 18, 16, 18% for Ford, 16% for Toyota. I'm not going to get any slower, but basically Ford has performed exceptionally well in the top tier against some of its competitors. You got Tesla and GM have really performed really well. And why is this? So if we look at GM, Ford, and Tesla as why they've been leading the pack over this short time period, the 3 to 2 year mark, it's really all has to do with EVs. So GM is jumping into EVs, Ford's jumping into EVs with some of their main lines, and that's causing a lot of hype. If you basically attach EV to the back end of your name, you're getting a lot of good price action. Toyota, while they are getting into that, they're not really hyped up as an EV company right now, even though they have really good vehicles. They're probably one of the I think they are the largest actual traditional car manufacturer in the world. They're just not getting that hype that comes along with EV being slapped at the end of your name. All right, so jumping into the financials for Ford, if we look at the last 3 years from FY 2018, they ended the year at $160 billion in revenue, 155.9 for 2019, and for FY 2020, they came in at $127 billion. That year-over-year growth has definitely been in decline. There was a big hit in 2020. They had a hard time producing cars. People weren't buying cars. Saw an uptick in the later months, but there still was a decline in a year-over-year perspective. If we look at gross profit and EBITDA margins, those almost got caught. Got caught 40% down and 50% down roughly. And net income margin was also down substantially. So not good things to see there. One thing I do want to look at here is their quarterly. So if we look at just their kind of cyclical nature, second quarter of 2020 was by far the worst in the pandemic. Typically, it is a down in terms of Q1 to Q2. It does go down, but not nearly by that much margin. Q4 and Q1 are really the best months for new vehicle manufacturers. So they've kind of had their best month that they're going to have for until Q4. So it's kind of disappointing that they're estimating they had $36 billion in revenue for first quarter. And then right now we're looking at, I believe, $22 billion as the earnings estimate for Q2. So we're gonna have a hard time going back to the annual. I think we're gonna easily beat 2020's numbers. I don't doubt that. I think we're gonna be in the $135 billion range. But we're still going to be far off from 2019 numbers and far off from FY 2018. So the concern here is we're having a higher multiple. We're having higher prices that we saw, from a stock perspective. The stock price is a lot higher than it was in 2018 and 2019. And, revenue is still depressed. And we're not having a dividend distribution still. Hey, you're still here. Please hit that like button. Thanks so much for watching. Back to your content. So I really wanted to All right, so real quick, I wanted to go through revenue by country. So if we look at North America, they're bringing in about $23 billion, $400 million in South America, $7 billion in Europe. So those are their two biggest markets, and IMG at 2.3, total auto at 33.6. Biggest area of improvement they could get here is in China. They only have 2% of the market. Europe, they're at 7%. North America at 12.5%. So some of the probably two biggest places they can continue to improve is in Europe. Possibly there's more competitors there, but they can definitely improve there. South America, I don't think you're going to see much of a gain here. And then they just can't be price competitive, I believe. And in China, I believe they can be price competitive, but they're going to have stiff competitor because their competitors can, basically charge lower prices. So they're going to have a hard time competing in China, in my opinion. All right, so next up, I want to look at estimates for revenue by the analyst. For the end of 2021, they're estimating full year revenue is going to come in at $129 billion. That's a little bit lower than what I estimated, 130 to 135. So in Q2, we're going to want to pay attention to that to see if that guidance is going to be up or down or just remain flat. So a year and a half from now, at the end of 2022, analysts have them coming in at 154 billion, which is still lower than the 2019 and 2018 full year revenue for Ford. So we're still seeing a decline in revenue. I think 155 billion was in 2019. So it's just slightly lower, almost a full recovery back to the 2019 levels expected in a year and a half. All right, so now on dividend information. Prior to the pandemic, Ford was issuing 15 cents per share per quarter, so about 60 cents per year. When I bought it, that was a 10% yield. I was pretty happy with that, although they weren't distributing a dividend. I've had capital appreciation of over 140%. So it's going to take a lot of years of dividends actually, pay me back. So right now I'm planning on selling mine after they reach long-term capital gains, honestly. But when it comes to the dividend, they're probably planning on reinstating this, I would say, pretty soon. Do I think they're going to go back to 15 cents per share right off the bat? It's possible. I personally wouldn't do it just because I think that I like to be a little bit conservative with my cash. I like to maintain that inside the business. I think Ford has a lot of transformative things they need to do with their EV transformation. Some of these models, they need to do some cool, more advanced things, and I think they need to put that money back into the business, and it inhibits their growth a little bit. One thing I want to look back is kind of their payout ratio over the last several years, and I think that kind of supports maybe lowering the dividend when they reintroduce it, and then maybe kick it back up over time. Let's see. I don't think leadership really believes that. I think they are a strong supporter of the dividend, and they may put it back to that 15 cents. I'm thinking they're either going to do it in Q2 or Q3. We'll have to wait and see. Q3 is a stronger quarter on the revenue side, so they may wait till Q3. And Q4 is definitely one of the strongest quarters they're ever going to get. So it's more than likely, if it doesn't happen in Q2, it's probably going to happen in Q3, in my opinion. All right, so me personally, I'm planning on selling my Ford stock because we're reaching that long-term gains for me personally. And I'm up quite considerably in the position. I've held it for a little less than a year, almost getting close to 2 years, and I'm just up over 100% ready to sell a position. That was my original strategy. If you're a long-term investor, you've held this for probably over 2 years, you probably could still be down on the position. I would personally wait but my price target is $14 to $15. I'm not expecting much more upside in the next 4 or 5 months. I think where we really do need to start seeing, if we do see upside, it's going to be if revenues are going to be increasing from, over the 2019 revenue side. I think that's going to be pretty important to hit. If you are a long-term investor, some other things you're going to want to pay attention to is deliveries on the Bronco. If they're actually meeting expectations on the Ford Lightning, they're going to have to keep those competitors at bay, make sure that they're, getting ahead on the EV train for their Ford pickup truck. And then lastly, the thing they need to do is reinstate their dividend. Ford was a big dividend company. And I think majority of the folks that were investing for dividends there. So if they're going to appease those investors, they definitely need to reinstate it. I personally don't think it's important to have the dividend. Like I said earlier, I think they need to reinvest it personally, but we'll see what they do. Hopefully you enjoyed today's video. Thanks so much for watching. Please remember to subscribe, like, comment down below. Let me know what you think of the video. Thanks so much for watching. My name is Frank Finance, out.